New lending guidelines are out and buying a house in the San Fernando Valley just got a little easier. Hi everyone, I'm Chelsea Robinson from the Robinson Home Group with Rodeo Realty, bringing you another segment of Getting Real in the SFV. If this is the first time you watched one of my videos on this channel and you want to learn everything about homeownership in the Los Angeles metro area, and specifically about the San Fernando Valley, then start right now by clicking on the subscribe button, tap on that little bell, and then you'll be notified of all new content. We are getting so many phone calls, texts, and emails each and every day, and we absolutely love it. If you are moving or relocating anywhere here in the San Fernando Valley area or Los Angeles areas, please be sure to give us a call, shoot us a text, send us an email, or even some old-fashioned snail mail. All of our contact info is below in the comments. However you want to get a hold of us, we are here to help answer any questions and get the process moving forward for you. Also, don't forget to check out ChelseaRobinsonRealEstate.com, which is updated in real time with all the listings hitting the Los Angeles area. Alright, so we wanted to do this video because some huge news just hit the LA housing market in regards to lending regulations. There's a lot of you reaching out to us asking about loan limits and what you can qualify for, and these new changes are really going to be shaking up what purchasing power buyers have. Also, don't forget to stay tuned to the very end to find out how these new loan limits are going to help you the most. All right, let's jump right in. Hi, okay, this is Chelsea Robinson here with Rodeo Real Estate, and I'm being joined by Jason.Cope from New American Funding. Hi, Jason, how are you?
I'm great. How are you doing?
I'm doing fantastic. So I hear that there are new loan limits and programs that are all getting revamped. So I wanted to talk directly to a source and find out what's going on.
Absolutely. This is very exciting news for us lending nerds. You know, throughout California, we're having big changes with loan limits. And just kind of to back up a little bit and kind of give you a little bit more detail on this. So in California, you know, loan limits are decided on a county by county basis. So we have a very diverse population with a lot of diverse incomes and that sort of thing. So depending on where you live, you have different types of loans. So as I said, county by county, in places like where you live in Los Angeles, where I live in Orange County, we're in a higher cost area. So we have different tiers of loans. Basically what that means is you have your conforming loan limits, you have your high balance loan limits, and then you have your jumbo loans. So those three distinctions are very different. So each one of those tiers of loans has different restrictions, different requirements for the borrower. So in this case, from our conforming loan limit used to be from 0 to 484. Don't ask me where they come up with these numbers. They're very confusing. Why they don't just use like 485? Just make it really easy.
Right.
But so our conforming loan limits went from 484 to now they're up to 510 400. Again, why come up with 510 400? Come on. So from 484 to 510, and then our high balance where you and I live in places like San Diego, Marin County, San Francisco, sort of the Bay Area, those went from 726 500. So I wrote it down just because 526 525 up to 765 600. Okay, so why this is important for places like Los Angeles and Orange County is, as I mentioned, you have different restrictions and different requirements for each pool or each tier of these loan limits. So by increasing the loan limit, you're opening up more expensive homes to more people. So before, they wouldn't have qualified for a jumbo loan for whatever reason. Maybe they don't have, you know, usually jumbo loans require certain amount of months of reserves in the bank. High balance loans and conforming loans do not require reserves. So now all of a sudden, hey, we don't have all this money in the bank, but we will qualify for this higher price home.
That's awesome. Awesome. I hear, have there been any changes to programs like FHA and VA as well?
Yes, typically, and this has been the same since 2016, just a fun stat for everybody. Since 2016, our loan limits have increased by over $100,000, which is insane. But when you think about it, you know, in California especially, we're not building homes fast enough for the amount of people that want to buy them. So we have a shortage of inventory and we have more people that want homes, which is why we keep seeing this increase in the prices, right? Just simple supply and demand.
Right.
So, and the way that this has happened is it's continued since 2016. Conventional loans go first. We find out what their new limits are, and now for FHA is following suit. So again, for Los Angeles and Orange County, FHA is now up to 760 or 765, 600.
That's amazing. People who used to be capped at, I believe, like 625, right?
Yep.
Now can go all the way up to
765, 600.
Wow, 765, 600. That's a massive increase because that really gives them a lot more options, especially when we live in bigger, high-ticket locations. It's sometimes hard to find the house that you're looking for.
Absolutely.
At 650, and being able to go up to 760 gives you a lot more range of options.
And you know what else on the flip side as well, if you're a seller, now all of a sudden you have a much larger pool of buyers coming to your home. So this is you know, you can really price your home right in that sweet spot. And you know, as a realtor, and I'm sure any seller who's had frustration selling their home, a big part of selling your home is pricing it correctly in the market. And this is going to open up that pricing a lot more for sellers to attract a lot more buyers.
So when did these new rates go, or lending requirements go into effect?
So as of January 1st, 2020, we are underway. So we're 8 days into it. Yes.
Yeah. That's great.
Yeah.
So for somebody who is looking to the FHA program, have the FICO score requirements remained the same?
Yes, they have remained the same. You can go down to as low as 580 on an FHA loan. For VA loans, any government loan, these are going to be a little bit less restrictive, let's call it. If you're going down to a 580, obviously it's not the best FICO score in terms of purchasing a home. That's going to be what's called a manual underwrite, which basically just means we're going to take a fine-tooth comb through everything, and we're going to take more things into account as to, let's say, hey, why are you down at a 580? Maybe they had some sort of medical issue that they couldn't pay back, and we'll take that into account when we're evaluating their entire credit profile. With VA loans, you know, they're going to be the most lenient on everything, and that is really a case-by-case basis. So, for example, I did one where the FICO was down to 510. He had a lot of different extenuating circumstances, but he had a 510. His DTI was up to like 60-something%, but we were able to get it done because, like I said, he had extenuating circumstances, and we, you know, told the whole story, and we're able to get this guy into a home.
That's awesome. So we're looking at 580 for FHAs. They can now purchase up to 760. 500?
600, yep. 765, 600.
And a typical down payment on that FHA loan is going to be still 3.5%?
3.5%, yep.
Okay, great. And then a conventional loan, what does that kind of look like?
Yeah, so conventional loan will go down to 620, and that's not lender specific, you know, not specific to New American Funding where I work. That is, you know, anywhere you're looking for a home, it's going to be 620 because these loans are insured by Fannie or Freddie, you know, government institutions.
Right.
But basically the way it works and what everybody wants to keep an eye on is, you know, they go on Credit Karma and like, hey, I can boost my score, you know, 5 points. Really 5 points isn't going to do you much unless you can get from 620 to 640. So every 20 points on your FICO score is going to give you a better interest rate. So if you can go from a 620 to a 630, it literally will not do anything for us on our end in terms of getting you a better interest rate. You're going to have to jump up to that 640, 660, you know, so on and so forth. And basically, once you get to 780, you can't really do much better than that.
You capped out. You did great.
Yeah, exactly. So, yeah, that's definitely something to keep an eye on. And then something with conventional loans versus FHA. Conventional is much more dependent upon your FICO score, right? So FHA basically just has 2 tiers. You either have 660 or less, or 660 and above. You get not as good interest rates, much better interest rates, right? Whereas conventional loans, every 20 points is really going to change what you're able to afford. And then one more thing with that, with the conventional, as we're talking about down payments and that kind of stuff, every 5% additional you can put down, if you can, go from 5% to 10% down, you'll get a better interest rate. But if you go from 5% to 7%, you're going to be in the same pool of interest rates.
So kind of going a little bit more on that with the down payments for conventional, do you typically see the lowest down payment on conventional being 5%, or do they go even lower than that?
They do go lower than that, but really everything kind of has to fall into place. If you're just going to do, you can do a 3% down for a conventional, but interest rates, mortgage insurance, anytime you put down less than 20%, you have to pay mortgage insurance. Those are just going to be ugly, frankly. Unless, like I said, unless everything else on your credit profile looks great, then it's not going to be so bad. But yeah, typically 5% is going to be your minimum down payment.
And what is the max that you can qualify for on those conventionals?
So conventionals, if you're in the conforming, you're going to be at 510, 400, okay? And then the high balance for Los Angeles and Orange County is going to be 765, 600.
Okay, so they're actually pretty similar balances to the FHA loan now.
Yes, exactly.
Interesting. So what is the perk on your side with going conventional versus going FHA?
Well, I'll put it this way. So I have an individual right now who's looking. He has 5% to put down on a home. He's in the conforming tier of loans, right? If you were to put 5% down for an FHA loan, excuse me, his mortgage insurance is going to be 0.85%. For FHA loans, if you put 3.5 to 4.99% down, you're going to have 0.85% as your mortgage insurance. If you put 5% or more down, it'll be 0.80, right? So you get a little break on the mortgage insurance.
Okay.
However, if he goes conventional, because he has a 790 something FICO, he has a great credit profile, everything checks out. If he puts 5% down on a conventional, his mortgage insurance is only 0.32. So again, with the FHA versus the conventional is very dependent upon what your FICO score is and what your full credit profile is, versus the FHA, where it's more of, let's call it like a cookie cutter sort of standard loan. Everybody kind of just fits into one pool or the other, versus conventional, everybody's different.
So my assumption in that scenario is that he is actually going to be saving every month by having that conventional rate, because he's saving that 0.5%, but
Yep.
on that 5% down.
Exactly. Yeah. And, and for this type of thing where he's at, $450,000, let's say, of borrowed money, he's saving a couple $100 on that mortgage insurance, because it's less than half with the conventional loan versus the FHA. And then one more thing to keep in mind that I always tell people with, whether you're deciding if you want to go conventional or FHA, you have to assume that your house is going to continue to appreciate at a certain amount. You're paying down the loan. So the equity that you're building, once you get to that 80% loan to value, that mortgage insurance for the conventional loan will drop off. You have to call it doesn't just fall off magically, right? You got to call your loan. But then boom, then you don't have a few $100 a month that you're paying in mortgage insurance, because not a lot of people know this, but mortgage insurance does not actually protect you, the borrower. It protects the lender if you default. Right. So right. You're paying for our insurance essentially. So something to keep in mind with the conventional loans is, you've got to come up with a plan, which is why you get with your lender as to how long it might take, in order for this mortgage insurance to fall off. Because with FHA loans, that mortgage insurance is there for the life of the loan. The entire time that you have that loan, that mortgage insurance at that higher rate, mind you, is on that loan. And the only way to get rid of it is to refinance into a conventional loan.
So apples to apples, he's got same purchase price, he's got same down payment, but where it really makes the difference is either a 0.8 on his mortgage insurance or a 0.3-ish on his mortgage insurance, which changes his monthly payment. So for that particular scenario, it's better for him to be going conventional, even though the lending limits are still the same. and so forth, because he's got the credit score that he could go either way.
Exactly.
I will add too, on my end, for conventional, we are seeing conventionals be preferred by sellers, because then they don't have to deal with FHA appraisals, which tend to be a little bit more stringent. So I do recommend as well that when people can go to a conventional loan, even though it sounds like those loan limits are the same, that they should go the conventional route, simply because it's easier to get an approval on a purchase agreement.
Yeah, and it is one of those things. There is kind of like for a lot of sellers, there is a stigma with FHA. Just oh my gosh, I don't want to deal with the FHA. Like you mentioned, for the appraisal, or just like, oh, this person doesn't have enough down payment, even though their bank account's going to look the same, whether it's FHA or conventional.
Right. There are still few out there that say money is money, but
right.
But if you're in a multiple offer situation, and need to be very competitive, then conventional may carry a little bit more weight.
Exactly. Yep.
All right. Well, if anybody has any questions, you can feel free to reach out to myself or to Jason. Both of our contact information will be below. If you like the content that you're seeing here, please feel free to subscribe, send us a text, give us a call, send us an email, even send us a good old-fashioned snail mail. We're happy to help you however we can. Feel free to check out ChelseaRobinsonRealEstate.com for further information, with local area information, tips, tricks, and trends for the marketplace. I will see you guys soon. Thank you very much, Jason, for your time. Appreciate it.
Absolutely. Thank you so much. Have a good day, everybody.
Thanks.